Hi there, everyone. It's Ifti from Extreme Returns. Today, I thought we would look at Jumia Technologies. Very interesting company, and they're a large part of my portfolio. So let's kick off. My name is 𝙋𝙧𝙤𝙤𝙤𝙤. I set up on Extreme Returns on Etoro a few months ago, although I've been on the platform for longer. By background, I'm a chartered management accountant. I've worked for big companies like Unilever and Mars Confectionery. I've also done recruitment consultancy and headhunting. After many years in the corporate world, I decided, you know what, let's set up my own business. So I started up with an estate agency, did that very successfully. More recently, I've been doing peer-to-peer car hire on platforms like GetAround and Turo. And with my family, we've become the largest in the UK. Please do consider subscribing on my channel. It's called Extreme Returns on YouTube. We've got a nice community of people there. Also, if you wouldn't mind, if you wanted to know more, then why not go over to YouTube, type in 𝙋𝙧𝙤𝙤𝙤 my story. I've made this cool cartoon about myself. I've also been featured on the BBC, Independent, Evening Standard, Motoring News, all sorts of other media outlets. In terms of the platform itself, I have got reasonable returns. In both January and February, we were at over, believe it or not, 15%. And then the market's dipped, especially in February. They've bounced back. We're on the 14th of February. It's a Sunday, so obviously the markets are closed, except the cryptos, which never close. We're doing okay. We've got fairly okay-ish volatility, drawdowns, 37 copiers. Thank you to all of you. I've got also 317 followers who I hope one day will copy me. Okay, so let's jump across to Stockopedia. I love Stockopedia. So as a qualified accountant, I do look at a number of sites, obviously. I find Stockopedia very easy on the eye, and it gives a lot of information as we're going to come across now. So the first thing to notice about Jumia Technologies, it kind of screams out at you, is look at their share price. Now, those who bought in the IPO in April 2019 would have bought around that price there, $2.50 maybe. And now it's trading at 48, and that wasn't even all-time high. It went up to as high as 65. Pre-pandemic, we're looking at, let's have a look here. March. Well, we're looking at 2.5, less than 3. So this is a 15 bagger. Wow. Market cap is just under 3 billion. Enterprise value is 2.5. Now, just to remind you, if the enterprise value is less than the market cap, which it is in this case, the company has net cash, which is good. Let's take a step back and describe a bit more about who they are. So Jumia Technologies is a German-based company specialized in e-commerce. It's a bit like Amazon. The company operates an online marketplace for African consumers. I think it's in about 11 different African countries. We'll come on to that later. The company offers a number of products, which includes dresses, leggings, skirts, polo shirts, belts, and so on. Let's have a quick look at their website again. Where are we? Here we are. This is Nigeria. So you can see it's got all sorts of products and stuff on here, which and they deliver obviously as well. Let's look at their revenues because that's quite important. Now, it's a bit difficult to give you an idea of size based upon so little information. I mean, yes, they IPO'd in 2019, but I would have thought by now, personally, their revenues would have been a lot higher. In 2017, they were 93 million euros. 2020, 140 million. Okay, it's a reasonable increase. And this year, they're expecting to do 183. Next year, 243. Compound annual growth rate, 14.5. I think they've been taking it. This is one thing I would question in terms of their revenue growth. It seems very muted compared to other online businesses, especially given the pandemic. They aren't making any profit at all, as you'd expect from a business that's growing. And it's difficult to look on other financial metrics like return on capital employed or return on assets or so on. They are not producing any cash flow at all. It's negative minus 1.25 per share in 2020, having come down significantly, but still negative. They are sitting on a reasonable cash pile. I don't think it's nearly enough. It's 306 million. And that will keep them going for another 2 or 3 years if they continue their cash burn or their net profit loss going forward. Now, one thing I did want to mention is the shareholders. So the reason I got into Jumia is because of these guys, Bailey Gifford. Now, I follow them very carefully. I love their investing style. I've been following James Anderson for quite a while now, and also Tom Slater, Gary Robinson, and the others as well. They've got a very large holding in this company. The others are, Renaissance Technology, that's Jim Simon's company. And you've obviously got Vanguard, Fidelity, etc. I wanted to jump across to Seeking Alpha and go through some of the information there. Now, Seeking Alpha, very good site, like Stockopedia. What I like about these people is that they have literally thousands of articles and analysis. So let's go through one of them. This is a company called Investor Trip. They've got 1.2K followers. Now, their summary is Jumia reached over 6 million active users. This is fairly recent. This is March 2021, so this month. And they say Jumia reached over 6 million active consumers during a global pandemic with a booming food delivery and digital payments business. The company will improve once pandemic fears are over and looks undervalued in comparison to e-commerce giants like Amazon and Alibaba. We're going to come on to that a bit later. They say Jumia will grow as Africa embraces widespread digital technology. So a bit of background about them. They are an e-commerce and digital payment business with strong interest in Africa. The company was founded in Lagos, Nigeria, back in 2012 and is now active in 11 African countries. The company is based out of Germany, but has outperformed bigger e-commerce brands like Amazon, Alibaba for the highly coveted African e-commerce market. And it talks about their share price. I'm not going to go into that too much. The business model, this is important. Jumia focuses on 3 core businesses: e-commerce, food delivery, and digital payments. While most e-commerce companies in developed countries saw soaring profits, Jumia struggled to grow due to logistic and supply challenges. I don't think they were completely ready. The global pandemic hurt Jumia's business, and I expect GMV, gross merchandise value, to improve once pandemic worries ease. And here's what they look like on the ground. Jumia food delivery is a fast-growing business that now makes up around 20% of overall transactions on the platform. It completed 5 million food deliveries in 2020, and the company recently expanded in Egypt after the exit of Uber Eats. Now, here's a bullish case for them. They currently have a market cap of less than 4 billion, but one of the top e-commerce digital payment players in Africa. I think, personally, this is going to be the most profitable part of Jumia. But let's compare it firstly with Amazon, 1.56 trillion, Alibaba, 634 billion, Mercado Libre, 81 billion. That's in South America. That's another one of our holdings. And Jumia, at 3 billion. It's slightly out of date. So it's not even registering if you compare it to Amazon. But I think that's the opportunity. Africa has 1 billion, more than 1 billion people who want to buy and sell products online. Countries like Nigeria, Ghana, Kenya embrace digital technologies and have a keen interest in e-commerce and digital payments. Now, here's the risk factors: a lack of internet adoption, increased competition, and logistic challenges. This chap has visited several different African countries and understand that the infrastructure doesn't compare to North America or Europe. Many African countries don't have easy access to internet, transport, or delivery solutions. I think that will grow in time. And he thinks that there's going to be massive upside for Jumia stock. Conclusion: don't miss out on the next Amazon or Alibaba. E-commerce will soar in Africa during this decade, and Jumia stock looks a lot more attractive at lower prices. E-commerce, food delivery, and digital payments gives Jumia a well-diversified business that will grow as Africa matures into a world-leading digital landscape. I also wanted to read this one very briefly. This is by Guru, Dr. Anna Tu, writes for 122, a blog for students and fans of financial markets. His summary is Jumia Pay, which is the digital part, demonstrated strong adoption and growth numbers. Logistics and advertising showed promising potential, which means they're lagging. User growth remains sluggish, but promises to accelerate after more investment at the end of the pandemic. Expect more volatility and wide range of outcomes for Jumia stocks. So this clearly is not one of those pandemic stocks, but it did really increase during the pandemic. That's ironic. I think people just piled into anything that said e-commerce on it, not looking at more detail that their logistics is far behind and need greater investment, that their revenues aren't great, they're still making a loss, and they only have 300 odd million euros in the bank. But because they're backed by such high profile investment funds like Baillie Gifford, for example, I think that they will catch up in their earnings, especially with Jumia Pay. There was another part in here. Here we go. This is it. So Jumia Pay, and I think, you know what? They may one day want to separate Jumia Pay from the rest of the business by floating it. And I think that will unlock huge potential, especially if they grow it significantly from where we are now. Talks about user growth. I'm not going to go through all of this, but it is, I think, the jewel in the crown of Jumia. They talk about the logistics and advertising and the numbers, what he thinks. Just to give you another perspective, those both were very bullish. Here's a bearish one. I just want to read out some of this. Again, I'm not going to go into too much detail, but this is from Damian Robbins, BA Business, 21 years old, investing for 10 years. Wow. He's only 21 years old and he's investing for 10 years. Good luck. He says that Jumia's forward revenue growth, lack of profitability, and high amount of risk put downward pressure on a seemingly exuberant valuation. And I think he's right. There is risk there. I totally get that. But my thinking is if they get knocked back in price, that I'll buy more because of the long-term potential. Now, Damian says operations in just 11 African countries, but they've got access to 70% of Africa's GDP and internet users. Therefore, the payoff for expansion, he says, looks poor. I think that's the case for saying it looks good. There is a risk such as infrastructure. I totally get that. Urban development, internet access, but I think that will come in time as big players like Google, Amazon, etc., start pouring money into Africa. Jack Dorsey, for example, is very bullish on Africa. And I think this guy's got a good conclusion as well. I just wanted to bring you to. There are obviously, he hasn't, but he talks about political risks, which is very good. I think there is a risk of that. But because it's Africa-wide, I don't think if one country becomes a problem due to the politics, then I don't think that will hurt the business enough for it to go down. I think that will just be a bump along the road. Okay, so that's Jumia Technologies. I just wanted to give you a good quick heads up on it. My name's Ifti from Extreme Returns. If you haven't been copying me, why not? Try it. it's not going to hurt you. Start with, I think they've increased it to $500, but I think they're going to bring it back down to 200. But 500 is not that much. Also, do consider my wife as a potential person to copy. Her name is Adiba. She's got Asian tigers. She looks at developed Asia. I think this is going to be, like Africa, a huge upside potential, great opportunity. The countries she's looking at: China, Japan, Thailand, South Korea, Taiwan, all of these countries. She's added India into the mix as well, although she doesn't have any Indian companies. She's got companies like Baidu, Sea, Meitun, Neo. Now they are trading at a loss. At the moment, she's down -2% in March, -5% for the year. However, I think that's the time to jump in. That's just my opinion. I will let you make up your own. Thank you very much. See you guys soon.